That moment when you slam the brakes, just in time, that's not just driving, that's risk management. In trading too, it's not about avoiding risk, it's about being ready for it. In the last two videos, we covered all the key details of the RSI, Stochastic, and MACD combo strategy. But no strategy is complete without solid risk management. Today, we'll look at real market examples and learn how to practically set take profit and stop loss levels. Let's dive in. Quick review of buy and sell setups using these three indicators. In the previous video, we covered the buy and sell setup rules in detail. Now, a quick reminder. Buy signal is generated when the RSI breaks above 30 from below. The stochastic %D line is in the oversold zone and then crosses above the %K line. The MACD line crosses above the signal line. Now, let's look at real examples in the markets. This is the Bitcoin chart on the 1-hour time frame. As you can see, price was in a clear downtrend, followed by a strong bullish rally of over 21%. Now, let's see if we could have caught this 21% move using a combination of RSI, Stochastic, and MACD indicators. To do that, we'll add all three indicators to the chart. First, in this area, RSI breaks above the 30 level, that's our first signal, indicating a potential reversal from oversold conditions. At the same time, on the stochastic indicator, the %D line, which was below the 20 level, oversold zone, crosses above the %K line, that gives us our second confirmation. And finally, on the MACD line crosses above the signal line, that's our third signal. With all three conditions met, this would have been a valid buy setup, allowing us to potentially profit from this bullish rally. Sell signal is generated when the RSI breaks below 70 from above. The stochastic %D line is in the overbought zone and then crosses below the %K line. The MACD line crosses below the signal line. Now, let's look at real examples in the markets. This is the Bitcoin chart on the 1-hour time frame. The price experienced a 14% drop within 41 candles, that's about 1 day and 17 hours. Let's see how we could have taken a short position and profited from this move using the rules of this strategy. First, we notice that the RSI has exited the overbought zone and dropped below the 70 level. That's our first condition for a potential short setup. Next, on the stochastic indicator, the %D line, while in the overbought zone, crosses down below the %K line, that's our second confirmation. And finally, on the MACD line crosses below the signal line, that completes our third condition for entering a short trade. Additionally, looking at the MACD histogram, we can see that it has flipped below the zero line, giving us even more confidence in the bearish momentum. So, based on this strategy, we could have taken a short position here and potentially captured profits from this 14% downside move. Risk management. How to set stop loss and take profit. Effective risk management is a key part of every successful trading strategy. Properly setting your stop loss, sell, and take profit (TP) levels helps you protect your capital and maximize your potential gains. Where to set your stop loss, SL. For buy positions, place your stop loss around 1% to 2% below the most recent swing low. This helps limit your losses if the price moves against your trade. For sell positions, place your stop loss around 1% to 2% above the most recent swing high to protect yourself from unexpected price spikes. Where to set your take profit, TP. There are two effective methods to set your take profit. 1. Risk to reward ratio. Always aim for a minimum risk to reward ratio of 1 to 2. For example, if you risk 2% on a trade, your target profit should be at least 4%. 2. Support and resistance levels. For buy, long, trades, look for the next resistance level above your entry. Set your take profit a little bit below that resistance zone. This way, you can exit the trade before the price potentially reverses down from that level. For sell, short, trades, look for the next support level below your entry. Set your take profit slightly above that support zone. This helps you lock in profits before price possibly bounces back up from that area. That's the end of this video. This was a complete strategy explained in 3 parts, step by step. If you found it helpful, make sure to like this video, subscribe to the channel, and hit the notification bell so you won't miss future content. Thank you so much for watching, and I'll see you in the next video.